For this video, I want to go over the IRS Form 1116, which is the foreign tax credit form. And this is going to be completed for the 2022 tax year for our taxpayer here, John Q. Taxpayer. Now, John in this scenario has a variety of foreign investments. So he has some foreign source dividend income, some foreign source interest income, and he had taxes withheld on those investments, right? So he paid some foreign taxes on those earnings, and now he's trying to figure out how and to what extent can he claim a foreign tax credit against his U.S. tax liability. So I've got the sample 1116 in front of us here. It also includes a Schedule B for the carryovers, and it is part of a full 1040. So we'll look at some of the other schedules in the 1040 that we need to cover. And then I do have a sample 1099 div here. This is the 1099 that John received from his U.S. broker. And we do have a worksheet here from the Form 1116 instructions. And so we'll go into this in more detail when we get to that part of the 1116. But this worksheet is required when you have income that is capital gain, so long-term capital gain dividends, long-term capital gain income, or qualified dividend income, or both. And we'll see why this becomes necessary when we look at the 1116. And then lastly, I do have one slide covering some background on the 1116 and then the fact pattern that we're going to be working with. So generally speaking, this 1116 is used to, again, file and claim foreign tax credits against your U.S. tax liability when you had foreign source income. Right, and so these credits are important because U.S. taxpayers have to report all their income, U.S. and foreign, pay tax in the U.S. on all of it. So by being able to claim foreign tax credits, we help try to eliminate the double taxation that might happen when we're U.S. taxpayers. So the U.S. taxpayer, you're generally allowed to offset your U.S. liability by the amount of foreign income taxes paid, but there are some limits, right? And so the limits that might apply depend upon a couple of things. So how much foreign tax is available? So how much did you pay? What is your ratio of foreign source income to total taxable income? So that's both U.S. and foreign combined. And then what is your effective tax rate in the U.S., right? What is your U.S. tax liability? All of these things will work together, as we'll see on the 1116, to kind of create this foreign tax credit limit that will apply, and it's computed differently each year, right? So it's computed the same rather, but you might have a different limit each year to year. Now, also important here, foreign taxes, although you're paying them in foreign currency and you're receiving the income in foreign currency, these have to be converted to U.S. dollars, right? And so they have to be in U.S. dollars because most U.S. tax forms require everything to be stated in U.S. dollars, and the 1116 is no different. Now, for individual taxpayers, if you have excess foreign taxes, that means do you have foreign taxes available during the year that exceed your foreign tax credit limitation, those excess credits can be carried back a year or forward 10. Now, one important caveat here is the GILTI income. So Section 951A, this was added in 2017. GILTI is global intangible low taxed income, and GILTI income does not get carryovers. So if you have taxes attributed to GILTI income, no carryback, no carryover, right? That's one unique exception. So let's look at the fact pattern here, and then we'll jump into the 1116. So let's start with the carryovers, right? Always important to look at what kind of carryovers do we have before we get into the current year stuff. So John invests in a variety of U.S. and foreign stocks, and so going into the 2022 tax year, if we have a look at John's 2021 tax return, we'll see he had $70 in foreign tax carryover from those prior years, and that's all related to passive category income, so interest, dividends, royalties, things like that. So in 2021, the amount of unused tax was $19, and in 2020 was $51. So if we quickly have a look at the 1116, again, we'll start with the carryover worksheet. So Schedule B is where we report foreign tax carryovers that could potentially be used for credits in the current year. So it's included with the 1116. A separate one has to be done for each category income. In our case, John only has passive category income, so he doesn't have any general category income, right? No foreign branch category income. So he's only needing to do one. So he's checked off the box here for passive category income. And because he has taxes going back 2 years, right, the 2021 and 2020 year, if we start with this column here, the current tax column, so column 13, this is 2022 for us, right? Now each year, obviously the current year is going to be different as it goes forward, but in 2022, this is our current tax year. So when we look at, well, what's the first preceding year? That's 2021. We enter the amount from 2021. 2020 is the second preceding year. So we have the $51 from 2020. All right, so once those carryovers are entered, we see the total there is fine. That's appropriate. Now we can get into actually completing the 1116 for the current year. So once the carryovers are done, now let's look at the facts for 2022. So in 2022, John invested in a RIC. Now, RICs are regulated investment companies. So these are either publicly traded, non-publicly traded. But the appeal with RICs is if the entity distributes enough income to its shareholders during the year, it can effectively pass through a lot of the tax attributes that occurred within the corporation. So if you invest in RICs, you might see things like foreign taxes withheld because foreign taxes that were withheld at that corporate level can be passed on to you as the shareholder. So the RIC here, if we look at John's 1099 div, showed ordinary dividend income of $2,109 and foreign taxes withheld of $201. And that's what we see here on his 1099. So we have $2,109. 495 is qualified, and we can see the foreign taxes paid down here, $201. Now, what's also important to note about these 1099s is you can see here that nowhere does it indicate how much of this dividend was foreign source, right? We only see the total amount here. So brokers and RICs provide supplemental information that lets you know, okay, well, of the total, this is precisely the amount that is foreign, or we'll give you a foreign source income percentage. And so in this case, they gave us a foreign source income percentage that said, okay, of the total here, 63.53% is foreign. So if John does a little bit of math here, 63.53 times $2,109 means it's $1,340 of foreign source dividend income from this RIC. All right. Now, if we look at the 1116, we'll see how these items get entered. So in the 1116, each column should represent a separate country. Now, RICs are unique in that even though that foreign source piece might contain a number of different countries, you can consolidate it on one column. So in this first column here, we've indicated RIC for the RIC investment, and we can see there the foreign source dividend income, $1,340. We haven't reported the total amount that was on the 1099 div because that includes U.S. source income, right? We're only reporting the foreign source income here. So we've got John's passive category income 1116. First column, we've indicated it's a RIC investment, and there's our $1,340. And in the first entry here for the gross income from sources within the country shown here on line I, we have indicated that it's dividend income. All right. So going back to the fact pattern, the second investment that John has, he opened a brokerage account with a Swiss financial institution. So this is a Swiss broker. He invested in a publicly traded Swiss company, paid him dividends of 790 francs on September 30th, 2022, and the broker withheld 15%, so 119 Swiss francs. On the payment date, the USD translation using that spot rate, means he was paid $800 in USD and $120 US in withholding taxes. Again, remember, we need to convert everything to dollars using the spot rate on the date that the income was paid and then the date that the taxes were paid. So in this case, he just received one dividend payment, so very easy to just look up that date and then make the translation. So on the 1116, we've got Switzerland in there in column B. There's our $800 US, and again, it's dividend income. Now for the Denmark savings account. So John also had a savings account with a bank in Denmark. Now the bank paid him interest income during the year, 1,146 Danish krone, and withheld taxes of 161 Danish krone. So the U.S. translation, when the interest was paid and the taxes were withheld, works out to be $162 in interest income and 24 US dollars in withholding taxes. So John has reported the 162 US dollars in interest income from a Denmark-based financial institution. Now, once those are entered in the income up there, we have to figure out the deductions and losses that are allocated to these income sources. So how does this section work? This section works in that we are trying to figure out what is our net taxable income from foreign sources. And so taxpayers are allowed to allocate expenses that are directly related to the income. That would happen up here on line 2, if you had any. Or you can allocate your standard deduction or itemized deductions to each foreign source. Now, for investment income like this, you're generally going to see line 2 blank, right? There's not going to be any expenses that are directly allocable to these income sources. Where you might see something on line 2 is if you had income from a flow-through business, right? So you had gross income from a business and expenses, maybe a rental property. Rental income would be reported up here. Expenses attributed to that rental property would be here. But in this case, there's no expenses for having these accounts open, right? So he just has the foreign taxes coming out and then the income itself. So on line 3A, John's entered the standard deduction. You enter the same thing for each column, okay? So the standard deduction you see on line 3A, that's consistent. And the same thing for line 3E, gross income from all sources. So we've got the standard deduction here, right? There's no other deductions we're adding. The gross foreign source income in 3D is the amount that's entered up here on line 1A. So we've got the 1340, the 800, and the 162. Gross income from all sources, this comes from page 1 of his 1040. So if we jump up to page 1 of the 1040, his total income here on line 9, $93,094. That's what's reported on the 1116. Okay, so there's the 93,094. And then when we do the division, we're trying to figure out, okay, well, what's the ratio of our foreign source income relative to the total? And so once we have that percentage, then we multiply the percentage. So multiply line 3C by line 3F. So 3C up here, the 12,950 by 3F gives us 186. And you do the same for each. Now, once those numbers are calculated, then you can do some subtraction here. So we've got the total foreign source income, 2302, minus the allocable expense, 320. Our net income from foreign sources is going to be 1982 for the rest of the worksheet. Now, what about the foreign taxes, right? One of the most important parts. So all the foreign taxes paid or accrued are entered in part 2 here. And the line item corresponds to the column. So row A, row B, row C correspond to column A, B, and C, and so on, okay? So if we look at column A here for the RIC, right? Column A is the RIC investment. We've entered 1099 taxes. Now, it says date paid or accrued, but if you look at the instructions, if you had foreign source income and foreign taxes withheld reported on a 1099 div, like you would in a RIC investment, you don't have to enter the date paid or accrued, and you don't have to enter the foreign currency amount in lines M through P. You can enter 1099 taxes, skip these rows, and then just enter the US dollar amount of taxes withheld. So we've skipped these, entered $201, which was the amount on the 1099 div, and that's fine. For row B, this amount attributes to the Swiss investment. So our dividend was paid on 9/30/2022. The amount in Swiss francs was 119 Swiss francs. The US dollar amount on dividends was 120. And then lastly, the Denmark bank account, the interest income, the payments were made over the course of the year. and the total amount of interest interest tax withheld, the foreign taxes withheld, 161 Danish krona, and then the US dollar equivalent is $24. So add all these up and we get 345 US dollars in foreign taxes eligible for the credit. Now, going into part 3. The carryover worksheet that we did at the start of the video, the $70, that amount flows through here to line 10. So we've got line 10, $70, and then line 345 pulls from page 1. So the total amount of taxes that we have available for the credit here are going to be $415. Now, what about lines 12 and 13? So 12, one of the common reductions we see is things like the foreign earned income exclusion. So if you had taxes that were, if you had income that was excluded on the form 2555, you might have a reduction here because you can't claim taxes on the income that's being excluded. And then the high tax kick-out exception, this applies to recategorize passive category income to general if you have income that qualifies for this high tax kick-out. We don't have anything that applies in this context, so that's why lines 12 and 13 are blank, and we've simply just entered 415 there as the amount of taxes eligible for the credit. Now, line 15, right? Enter the amount from line 7. This is your taxable income from sources outside the U.S. before the adjustments. So that 1982 figure there, that's what's up on line 7. So after we took our foreign source gross income minus the allocation of that standard deduction, we've got the 1982. 1982, no adjustments on line being reported to line 15 on line 16. So we've combined the two amounts, and this is going to be our net foreign source taxable income. Now, line 18, this is really important. Line 18 is the taxable income from page 1 of your 1040. So if you look at 1040, your page 1 of the 1040, taxable income is reported there on line 15. Now, in this case, their taxable income is $80,144. However, that is not the number that we can use. So we can't use the 80,000 figure because of capital gains, long-term capital gains, that is, and qualified dividend income. So note the caution here. If you figured your tax using the lower rates on qualified dividends or capital gains, see the instructions. This is where the worksheet comes into play. So in this worksheet, our starting point is our actual taxable income from page 1. So there's that 80,144 number. And then we enter $495 is the amount of qualified dividend income that John had on his return. And that's the amount coming through from the 1099 div. So the $495 coming through from the div is entered there because that is being subject, based on John's overall effective tax rate, it's being subjected to that lower 15% qualified dividend rate, not his actual marginal rate. Now, there's different entries here, right? So obviously if John made more money, then maybe his qualified dividends would be subject to the 20% capital gain rate, but in this case, he's paying the 15% rate on his qualified dividends. So we're using this row item there, multiply line 8 by 0.5946, 294. So 8,144 minus 294 gives us an adjusted taxable income that we're going to enter on line 18 of 79,850. So that's why 79,850 is entered there and not the taxable income from line 15 of page 1 of our 1040. All right, so now once we've done that, we're trying to figure out what is the relative percentage of our foreign source taxable income compared to our overall taxable income, and that's what's here on line 19. So divide the two together, you get 0.0248. Enter the total amount of tax that John has from page 2 of his 1040, so 13,209. If I jump up to page 2, 13,209 is the total amount of tax that he's calculated on his total taxable income. So that's using the qualified dividends and capital gains tax schedule. And so once we have the 13,209, multiply that figure by 0.0248, and we get $328. $328 is the maximum amount of foreign tax credit that John can take for this year. So this is where the limitations apply. As we saw up here, John has $415 of credit available in the current year, right? But it's going to be limited to $328. So how does John apply these? What are the ordering rules? Because remember, we have foreign tax credit carryovers and we have stuff from the current year. Well, the rules require that you use all the current year credit first. All right, so $345 in foreign taxes are available for this current year. This is what was paid or accrued for this for this category income, right? The passive category income. So $345 from all these investments. That's the total for the current year. So $328, if that's the available credit, then that means $328 minus $345. He's got 17 of current year credit that was not able to be used. So if we look at foreign tax carryover reconciliation schedule, Schedule B, we can see here that in the current tax year, obviously these are all grayed out because nothing's being applied from the prior year because it's the current year. But notice here, line 17, right? Or sorry, line 6 item amount is $17. So we use all of the current year tax up to $17 left over. So we weren't able to use anything from 2020, nothing from 2021. So these amounts remain here on line 8 to be carried over to 2023. And then the current year credit carryover, $17. This is also going to be rolling over to 2023. All right. So we've covered those pieces. So now what happens to this 328? So the 328 is going to be the amount that he can actually use again. And so that is reported first on line 1 of Schedule 3. So Schedule 3, additional credits and payments, it's a non-refundable credit. So foreign tax credit here, we've entered $328, and then that is going to flow up to page 2 of the 1040, line 20. You can see here, Schedule 3, line 8, the total, $328. So for John's total U.S. tax liability for the year, $13,209, he gets a reduction, $328 in foreign tax credit. So the net total amount of tax that John owes for the year is the $12,881, right? So I think that covers it. I think that covers everything I wanted to address in this video. I hope that was clear. I tried to cover each line and each element in as much detail as possible. Certainly, if you have any questions, feel free to leave me a comment below. Happy to answer any I can. And as always, I look forward to seeing you again on the next video. Thanks so much. Bye.